Hey guys, welcome back to the channel Best Place for Long-Term Stock Investors. Today, we're going to be sharing our thoughts on the Fed's recent interest rate hike, Berjaya Corporation Food Berhad's recent share price limit up, as well as Hartalega's latest earnings report. As a disclaimer, none of this should be constituted as a financial advice, and we do own shares mentioned in this video.
Arguably, one of the largest IPO this year will be FarmFresh, and we'll be covering them in our deep dive session scheduled for this Thursday. The early bird ends today, right, John?
Yes.
It ends today. So if you want to get on board to know about FarmFresh, to know about ATAC, which is a company that just IPO'd, as well as MTEL, the dark horse, do sign up, and the link is in the comment section below.
Okay, John, so the first topic that we're going to be talking about is the Fed's recent interest rate hike. And it's no longer rumors on the street, but it's actually on the news now. It is that the Fed may be potentially going to raise interest rate 7 times.
7 times, correct.
So actually, what will happen to the market?
I think the Fed wanted to raise, they're having an emergency meeting today on the 14th of February or Valentine's Day. Yeah. They want to give a special Valentine's gift to the market, right? I think the Fed, one of the key points why the rate hike had to happen was, the rising wages and the inflation rate in terms of food and other consumer discretionaries in the US. For us as investors in the market, especially in Malaysia, I think we have to start watching out for those companies that have a lot of leverage and a lot of debt, because they will be bearing the brunt of an interest rate increase. I think we don't need to go far. Look back at 1997. A lot of the construction companies were caught off guard because interest rate literally spiked overnight, and their balance sheet took a huge beating. Projects went wayside. So as investors, I think it still go back to basics, right? Those companies that have a very low debt ratio, they are not going to take the brunt of all this. But in terms of consumers, well, you will see prices of items will start increasing, but over a longer period of time, it will reach an equilibrium because businesses will have to be more efficient. Can you imagine you go to your food, let's say you buy imported stuff from the US, right? And then they keep on just increasing price. They will come to a point where consumers will start changing to alternatives.
Yep.
So what I'm trying to say is this: businesses over time, they will learn how to survive with whatever situations being thrown at them. Interest rates increase, whatever. There will be a knee-jerk reaction. But over time, businesses will try to say, can I make my business more efficient? Even with interest rate increase, can I find ways to raise capital at a cheaper rate or make my business operations more efficient that I do not pass on that kind of cost to my customers? Because if not, right, can you imagine if Starbucks one day increased their price of coffee to 50 ringgit a cup?
Whoa.
I doubt people will. People will still go, but I doubt they will be going at the same volume and way it is today.
Yeah, most definitely.
Yeah. So I think as investors, we have to be, while it worries us, we have to be also cognizant that it is not the main factor for why you should choose to invest. Yeah, what are your thoughts, Jonathan, in terms of this?
To me, I see it is a very healthy correction. As a long-term investors, I like things when are cheap, not when things that are expensive. So it actually gave me the opportunity to actually buy companies that I didn't manage to buy at their peak.
At their high valuations.
At their high valuations, yeah. So it's actually very refreshing to see this happening right now.
Yeah. Obviously, not everyone will agree with you because some of them bought at the high.
Oh, yeah, most definitely. The only way is to, DCA all your way through,
Yeah, DCA all your way through, especially good companies that have the potential to grow, multiples. I think, you see, people always seem like a genius when the market is bullish. And I think the true test of investor is that when the market is bearish, the true mark of investor is your conviction to buying at the dip.
Yep.
It's very easy in theory, but it is not necessarily easy in application. I mean, how many people have that kind of conviction to actually buy the dip? It's easy to say it, but I think even what we see in our market, even some of our friends and family members, can it go lower? I mean, I was just having a conversation with my badminton gang that I play every Wednesday, and then I was telling them, "Hey, this is great. It's a great time to buy." I said, "Hey, I didn't buy because I'm afraid it go lower." I'm like, "Yeah, but you know when you're gonna catch the bottom, you see."
Yeah.
How you know, right? So
actually, this reminds me of one of the scene in the Big Shot.
Oh,
so
yeah.
in the final scene, right, where Michael Burry get his a call from his investor after the market crash in 2008.
Yeah.
One of his investors actually asked him, the stock market is at all-time low and you're buying.
Yeah, correct.
Yeah, so that scene is like, whoa, why?
Why, right?
why do you ask such questions?
But you see, it's irrational to a lot of people.
Yeah.
And that's the struggle of investors that have that conviction, because you have to drown out all this noise, You literally have to drown out all this noise and go back to your own due diligence, your own fact checks, and having that kind of conviction. So maybe we end this segment with a quick note on the history of the treasury yields. It's even though it sounds like a lot, 7 times the hike at 25 basis points, which is 0.25. You're talking about an interest rate after 7 hikes of 1.75%. Now, historically, the highest that the US Treasury yield has had was 15.84%. So the economy can take it. It's just that different scenarios, different circumstances. And as I said earlier, businesses will adjust, economies will adjust. Don't take this as a knee-jerk reaction and fear of the market, but take this as an opportunity.
Yes.
Right?
Yep.
So I think we leave that note to the investors. I think you'll be surprised that emerging markets will be in the best place for you to reap this kind of growth.
Yeah, most definitely.
Yeah.
Okay, guys, if you need a second opinion on your stock analysis, you can actually share your research report to us. Just email us at this email you can see over here. And please don't only include the financials of the company. Do share with us what are the business qualities that you seek, what are the growth potential of this particular company, as well as your valuation towards these companies. Okay, so the next one we're going to be talking about is Berjaya Food Berhad's recent share price limit up. So it actually went up more than 30% in a day.
Wow. And it has been hovering like 180, $2, 180, $2 for the longest time, right?
Yeah. And then all of a sudden it went up, skyrocket. And actually there's a reason for it. If you go to the next slide, you can see that actually if you look at their recent quarterly reports, right, they just released their quarter 2 of 2022. Their profit actually increased more than 3 times.
Yeah, 24 million to 67. Yeah. This is profit from operations. But if profit after tax, almost close to 4 times.
Yeah, I mean, this is
quarter and quarter.
Quarter and quarter, yeah. And this is not really a surprise for us because if you notice, right, there's no more lockdowns. Everybody's going out and eating. So definitely restaurants are actually right now, they are benefiting this type of movement. But the thing is, will this performance actually last? Do you think that it will sustainable in the future? So what are your thoughts on this?
I think good that you brought up about the opening up of the economy. I think what I'm looking forward to is the opening up of the borders, to be honest.
Yeah.
They made a U-turn apparently yesterday. So they said 1st of March will open, and then now they said they will have to study again. But nevertheless, coming back to Berjaya Food, so the 3 main franchises that Berjaya has is the Starbucks, the Kenny Rogers, and the Jollibee.
Yeah.
So these 3. And the Starbucks is the crown jewel. The Kenny Rogers have not been profitable. This quarter they've been profitable. The Starbucks, I don't know if you've been to the Starbucks recently. They've increased prices.
Oh, no, I'm not a Starbucks drinker, so I never noticed.
Well, I have to go because in a way that's where we meet for business. So I noticed the price increase. So back to your question about sustainability, thinking about our population size, which is about 33 million, and Starbucks is mainly an affluent kind of market.
Yep.
You're not going to get a Starbucks in Jeli, Kelantan or Kuala Krai, Kelantan, right? There's no spending power. Even if there is, there's going to be a very small minority. So I feel that in Malaysia, Starbucks has somewhat come to a stagnant market. You're not going to talk about double-digit growth. Most likely, you look at Starbucks as a same-store sales increase. That means either price increase, operational efficiency that reduces costs, and probably single-digit or high single-digit kind of returns or growth year on year. I feel this is more likely a one-off.
Yep.
That, once it coming from a low base, a one-off. To be honest, I see the market already saturated in terms of coffee places, and now with a lot of what I call boutique cafes coming out, I think it's not going to bode well for Starbucks over the long run. So I see this as more of a one-off rather kind of And at $3, if you do I think calculation for normalized, you're paying about 11 times? I can't remember what was the PE, John.
I didn't really keep up with the restaurant business because I'm not really a fan of a restaurant business. I'm more of a tech guy, or maybe businesses that can actually grow their business like 10-20% year on year basis.
Yeah. So at these kind of valuations, I think to your question about how sustainable, from my point of view, I don't think it's going to last over the long run. Probably it's a once off, but we'll see. I mean, Kenny Rogers has turned into the black from the red.
Yep.
Hopefully that this will help propel Berjaya into a better place. But you talk about double-digit growth going forward from here.
It's pretty unlikely.
Yeah.
If you're liking this type of content, make sure you like this video and also hit the subscribe button. Also, make sure you smash the notification bell so that you will know when new videos are out. Okay, so the last topic we have here is Hartalega. So if you notice, Hartalega's share price actually has been beaten down quite a bit. It's actually dropped about 11.27%. Actually, there's a reason why it suddenly dropped. If you go to the next slide, you can actually see that their latest quarterly report, which is the Q3 2022, their sales actually dropped more than 50%.
Yeah, half.
Half. Actually, there's a reason for it. It's because of the ASP is actually deteriorating quite a lot. So that actually resulted them to have their operating profit to actually drop also very substantially.
Yeah.
And actually, this is actually expected already.
Correct. I think we covered this in our deep dive.
Industry glove.
Yeah, when we did, I can't remember. I probably think it was in August or July, somewhere there.
Yeah.
Right.
Last year.
Yeah.
By the way, if you guys are interested to know more about our deep dive on glove, you can actually check it in our courses. I think we'll put the link at the description or something. It's called the Deep Dive Industry Glove, where we cover all of the glove companies,
including those in China, including about their capacity expansion, ROIC, and whether we made some opinion about whether these Chinese glove companies actually had or will be able to come out with that capacity. So,
so you can check more details down below.
Yeah.
But anyways, back to the video. We actually noticed that one of the projections that is made by Frost & Sullivan is that in 2022, the estimate ASP for gloves is actually specifically for nitrile glove is around $53.5 per 1,000 pieces. Yeah, and if you look at the current price right now that we're having, is actually 25 to 35 USD per 1,000 pieces.
Wow, so it's even half of the projection from Frost & Sullivan.
Yeah, so actually that's how fast the ASP is actually dropping. And I think most of the glove companies actually overestimated how long these ASP's strength will last actually. They're actually expecting a much more higher demand. But because of the there's a lot of companies setting up
influx of capacity,
and
supply.
Yeah, that actually resulted their earnings to actually deteriorate at a much faster than what is anticipated.
Yeah. Also, I think more importantly is there's two sides to the coin. Definitely, supply has come to an equilibrium of demand. But at the same time, if you are looking at a longer term horizon, I think the pricing of gloves today, a lot of it is as if a lot of the share price is pricing as if this business will go out of business.
Yep.
So I know there's a lot of bag holders that used to buy glove at a peak and whatever, and they vow not to touch the glove industry anymore. But at today's prices, in terms of valuations, in terms of going forward, I think where an astute investor should look at is that did the Chinese actually come out with enough capacity to actually say what they said 2 years ago? And if that's not the case, then who are the incumbents who will supply gloves, have somewhat of a majority or a stake in the supply side going forward?
Yep.
So what do I mean by that? Meaning, will the Top Gloves, the Hartas, who are world leaders, actually continue to be there? Or will they be taken over by the Chinese guys who promised a certain kind of capacity to last year? Did they actually deliver on that promise? So what it means is, will the incumbents stay on the top? And if you think they are, then what kind of valuations are you buying in today?
Yeah.
You want to buy them when you see the problem about a lot of investors, including myself in the past. You want to buy, a lot of us succumb to the point of you want to buy stocks when they're sexy, price is rising, but no one wants to look at them when the price are beaten down and it's so bad, right?
Yeah.
I think that's where a true investor should look at. When no one's looking at it, everybody thinks that they're going into the dumpsters, and that's when you start dumpster diving and start looking at this stuff. You see?
Yeah, and speaking of dumpster diving, right? If you notice one of the Inco's directors, if you look at their ownership, right, it actually dropped quite a lot.
Correct.
From I'm not sure whether is it the CEO or managing director. He holds Inco around 33% interest stake, and now it actually dropped to about 6%.
Yeah. So there you go. You see, so Inco promised to be one of the largest. They claim to come out with this kind of capacity and all that. Did they actually deliver on the promise? Whereas our Malaysian companies, and this is not a buy a call or sell call. We just look at facts and numbers, right? When they say they're going to expand this capacity, did they actually deliver? And that is a track record going forward to say that the Chinese guys, were they over-promising something, trying to hype up the demand for their shares? And look at the guys who are actually doing the work on the ground, you see. And combine that with very cheap valuations, I think, it will look pretty interesting when all this noise drowns out and then come back to pre-COVID times. How did these companies were growing, and glove companies were growing at
10%.
10 to easily 12% per annum,
Yeah.
And right now they're being priced as if they're going out of business. So I just plead to investors to look beyond all this.
Yeah.
Yeah. I think you want to talk about the dividends as well, right, Jonathan?
Oh, yes. So if you actually read further in their cash flow statement, right, you notice that Hartalega actually increased their dividend payout by 10 times.
Wow.
And at the rate where their profits are actually dropping, they're actually increasing their dividends. So to me, actually, right, personally, this is only my own opinion, I don't really fancy it that the management is actually doing this. Yeah, actually, I was hoping that they are more conservative with their payout. So instead of paying it as dividends, they maybe keep it out, they return it as inside their reserve, and maybe keep it for their next capital expansion. But that's just my own opinion. Of course, if you are a shareholder, you'll definitely be happy because
to reward from the price dump, right? At least you get a consolation from your dividend, right?
Yeah. So, but what are your thoughts on this?
I think we discussed this before the show. I think they had 5 billion in cash, right? If I'm not mistaken.
3 billion. 3 billion.
3 billion. 3 billion in cash, paying out 2.4 billion right now. I think overall, we won't go into so much detail in essence of time, but I think I personally, I'm aligned to you about capital expansion. I like companies that make the money work hard. But in this case, I think I'm a little bit on the Hartalega side because looking at the numbers, they have enough cash flow from operations, generating enough cash flow from operations to actually do capacity expansion. But at the same time, enough cash reserves to, in a way, reward the shareholders for holding on to and to give them some sort of confidence. Hey guys, I think I know I'm still working hard the money, but at the same time, the profits that we got from last year, just distribute out rather than keep it into a company. What they're going to do? 2 billion. How many other plants or NGCs they're going to build, right? Unless the government of Malaysia or any other government is showering them with free land and then they shower them with additional manpower resources to run these projects to build. Probably they'll say, okay, let's do this expansion slow and steady rather than, a once-off. Because it's not just the money, John. Even if you throw money at a company, but the company doesn't have the resources to actually take on the projects, right? Then what's the point? You keep money, what are you going to do? Put into fixed deposit, earning measly rates. Might as well just distribute to shareholders. At least emotionally, you keep the stakeholders happy. That's how I see it. That balancing game.
Okay.
Yeah. So, if you're a Hartalega shareholder, I think you should be happy.
Yep.
I know some of our students, they're long-time shareholders. I think at the peak of Hartalega's price, their share price was, their cost per share was actually negligible at zero already.
Because of all the dividends that
all the dividends and I think what you want to not discount is the management that runs this company.
Yeah, most definitely.
Yeah. Yep. So I hope you enjoyed the content. I think that's all we have for these 3 topics today. Again, if you find this content interesting, insightful, and you want to, you can learn more from it, and please do share it out to your friends and family. Do hit that like and subscribe button and hit that notification bell. So we'll see you guys in the next video.
Bye.